Tsinsi.
SABC News. The African Perspective.
And coming up in your sports news this hour, South African marathon record holder Elroy Galant voices his concerns about financial literacy amongst athletes, while the golf world #1 player Scottie Scheffler bags $1 million from his latest win. I'll tell you more at 4:30.
Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
It has gone exactly 8 minutes after 4 p.m. Central African time. A very good afternoon to you, Africa. A lot in store for you this afternoon. We'll take a look at a study conducted by Moody's Ratings on the rise in borrowing costs for governments as well as businesses in sub-Saharan Africa. We're looking at Kenya, Nigeria, as well as South Africa. We'll look at the factors that contribute to these rising costs and how that impacts investment, especially private investment in those countries. Also coming up this afternoon, a collaboration between Visa Cards Network as well as Onafrique's mobile money wallets in the Democratic Republic of Congo. We'll be speaking to the Chief Commercial Officer at Onafrique regarding this collaboration as well as what it hopes to do as far as the payments as a service platform is concerned. 9 minutes after 4 p.m., let us know where it is that you're listening to us from. You'll find us on all the various social media platforms on X, Instagram and YouTube. We are at Channel Africa 1, and on Facebook we are at Channel Africa.
Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
We begin here this afternoon with the United Nations Development Programme, the UNDP. They say municipalities across Africa must urgently ramp up infrastructure development as 2/3 of citizens will be living in cities in the next few years. This was heard during day two of the 3-day Urban 20 Mayoral Summit, which is taking place in Sandton in the Gauteng province, South Africa. The summit brought together local government leaders as well as mayors from several G20 countries as well as from across South Africa. Sashin Naidu reports.
As South Africa assumed the G20 presidency in 2025, the U20 summit provides a critical opportunity to elevate the voice of cities in shaping global priorities. Day 2 of the U20 Mayoral Summit focused on a number of issues, including building a
Mielani, are you with us?
Hi, I'm not hearing you. I'm not hearing you well, though. Your volume is lower.
Is it quite low? All right, because the background on your end is also quite noisy. Let's see what we can do from the volume perspective. Is this a bit better for you, Mielani?
No, I was hearing you first when you were talking to me, and then you did some changes.
All right, let's try again. Is this better?
I can hear you now.
You can hear us.
hear you
Okay, lovely, great. I was wanting to start off with looking at some of the reasons that Moody's has put in place for the high borrowing costs. They've cited high inflation as one factor, as well as low savings rates as some of the factors that lead to the high borrowing costs. How directly do these actually affect borrowing costs?
Yeah. I'm not hearing you well because you're far from your port, or your volume is too low.
All right, let's do this. What we're going to do is I'm going to take you back to our producer, Mabu, and then we'll try and just get you back on a better line. That's Mielani Mkabela, Director and Chief Economist of Answisa Management Group. Let's sort that line out, and we'll be back in just a moment.
Es-tu préoccupé par quelque chose? Es-tu passionné par les questions qui comptent? As-tu une voix qui mérite d'être entendue? Eh bien, nous avons la plateforme parfaite pour toi. Téléphone-nous ou fais-nous un WhatsApp au +27 66 408 87 42 et nous te rappellerons. Sois dans la conversation.
Salut Channel Africa, ici Beno le diamant rouge et Bina l'export depuis le Cameroun, le pays des lions. Voilà.
Sois dans la conversation. Il ne s'agit pas seulement de parler, mais c'est ta chance d'exprimer ton point de vue, de partager tes opinions et de t'engager avec une communauté qui valorise ton avis. Suivez-nous sur les réseaux sociaux, visitez notre site www.channelafrica.co.za et préparez-vous à partager vos points de vue sur Channel Africa, la perspective africaine.
Africa in Business on Channel Africa.
Joining us once again is Mielani Mkabela, Director and Chief Economist of Answisa Management Group, as we interrogate a study that was put together by Moody's on factors that are leading to high borrowing costs on some of the major countries in sub-Saharan Africa, our focus being Kenya, Nigeria, as South Africa. So, Mielani, let's start once again looking at what it is that ends up leading directly to borrowing costs. There's high inflation as well as low saving rates that Moody's has cited. How directly do these impact and affect borrowing costs?
Thanks, and the listeners of SABC. What I can highlight as a critical part is since 2020 or post-COVID or the global health crisis, we had a challenge mainly in the African markets, or like whether we can say top 20 leading nations in Africa. They struggled in terms of policy certainty. That is one area which it really affected countries because they were supposed to change from the past normal to the new normal, and that has really affected a lot of countries because they couldn't really adapt, or they have been adapted to the situation. But we as well get unfavorable markets where you could find that when investors look at these markets, they are not feeling the markets are attractive to their level. And when you look at whether it could be doing business in Africa, or you look at foreign direct investment inflows to Africa, it has went down, and that is practically as a result of post-COVID and less trust in terms of whether it could be political leadership in different African countries. That is the main factor which is causing the challenge. While as well, when you look at central banks of other countries, not in South Africa, because South Africa, we have done well in terms of managing price stability, and then we congratulate the central bank for that. But when you look at other African countries have struggled in terms of managing price stability, and that has been causing a huge like problems in terms of inflation. So the rise of like their inflation have caused them like massively. It's not always that a rise in inflation can be positive if the country is not good or like the country is like medium or lower. When a rise in inflation comes to the sector, you find consumers will be struggling to repay the debt. The country will be struggling to repay like maybe World Bank or IFC loans, and then corporate as well will be unable to be paying or making repayments to their banks and the global like loans. While additionally, when you find inflation,
I wonder though, Mielani, how do these conditions impact and affect private investment in those very specific countries?
I didn't hear you well.
How does the high interest rates and the borrowing costs, how do they directly impact private investment in those countries?
Okay, so like when you look at when interest rates are higher, they might be good for investors in certain markets. But like as well, you find that like if investment is domestic or is driven domestic, then it will mean that local businesses will have to be taking money from the bank and invest it in corporation, which that could be a problem automatically because the bank will be charging high interest rates in the domestic like markets because the repo rate is higher, then the interest rate is higher. In South Africa, it is partly in good management. It's just that we are struggling with our political situation here. But like in terms of like interest rates and repo rates, I think we are finding that. But in other African countries, you find that that is a burden for the country because then most African countries are not attractive for investors that are foreign, but it could be they depend in local investments. And if it is in that way, the banks that are there locally will have to be giving credit to companies for companies to invest, and automatically it's higher interest rates, which as well it will not really necessitate a higher return on investment practically because inflation is higher, and then the dollar will have like probably gotten to have like a strength over their currencies, which inflation domestic and the dollar will affect in terms of like their attractiveness.
So Moody's has also highlighted policy weaknesses as contributing factors. Can you zone in on which specific policy weaknesses are they highlighting?
So policy uncertainty, it could be when you look on how things are happening in African markets, you will find that there has been a hype of African countries looking at changing the mining policies and the industrial policies and agricultural policies. And such controls where you find that in South Africa, if you look what we normally call the Msebenzi mining policy, it was coming in to have an expectation of higher management control or like a higher asset control from the like the shareholding. So if the past mining charter was allowing 23%, and then the next charter could be reviewed and it becomes that the locals must take 35% or 40%, you will see that the investors will not be comfortable with that because they were still used to the 23% or the 20%. And if they are supposed to now lose additionally 10%, it can as well mean that they are not going to be making profits for the first 7 years of their mining operation, While in the current stage, when you take on mining, in the first 5 years of operation, you might not be making a profit, but it can be a break even, because that is the time that you are investing on infrastructure and equipment that you are using to do extraction. But at the same time, the head counts, you haven't started to be selling such minerals. So mining starts to be attractive in 7 to 15 years.
It's certainly very
and
labor.
that's when the mining expectation in terms of yields or better yields to be attracted to.
So we'll have to leave it at there, Mielani. But like, what a great point, the fact that it's so labor intensive and capital intensive for at least you say that the first 5 years. But we thank you so much for breaking down some of the aspects of this Moody's ratings report that was put in place. Thank you very much, Mielani.
Thanks, and the listeners of SABC.
Thank you. Have a great one. That's Mielani Mkhabela, Director and Chief Economist at Answisa Management Group. And one does wonder, what does this mean as far as the risk of further downgrades for the likes of Nigeria, of Kenya and South Africa? And does it somehow limit access to the international capital markets or not? One of the dynamics and the many questions that come out of this particular report. It's gone 26 minutes after 4 p.m. Central African Time.
From markets to innovation. From markets to innovation. Africa in Business with Thami Ngubeni covers it all. With Africa's future in focus. Channel Africa, the African perspective.
Now, the local South African currency, the rand, has been strengthening against the US dollar, hovering around 17 rand 39 cents and 17 rand 33 cents. According to market analysts, the rand's performance is due to the market's reaction to the ongoing economic developments coming out of the United States. Now, the rand was trading at 17 rand 35 cents to the dollar at midday, which is Monday, the 15th of September. Notando Makutulela reports.
Earlier this year, the rand traded at almost 19 rand to the dollar. This was due to the reciprocal tariffs announced by US President Donald Trump in April. This left traders concerned that the weakness in the local currency could fuel inflation that had been coming down in those months. But since the implementation of the US tariffs, the local currency has been strengthening against the dollar. Market analysts say while this is positive news for South Africa, the US continues to grapple with recent economic developments, which in turn led to the weakening of the US dollar. Viv Govender, portfolio manager at Rand Swiss, explains.
I think one of the primary reasons for this, it's actually been weakening, not just versus the rand, but versus the euro, etc. I think what's been happening with regards to the US currency at the moment is that the market's reacting to the Trump administration's policies recently, things like the tariffs, the weaker economy, and recent times, the jobs that come out, as well as the increased chances of rate cuts coming through. These factors have caused the dollar to weaken, significantly.
Magwe Masilela, founder of Magwe Fund Managers, says the local currency remains steady against the dollar.
The rand's performance is all at the mercy of what is happening with the US dollar. And as we all know that this week we've got an interest rate decision that will be made by the US. So that itself is driving the dollar. And hence we see the dollar, just like the rand, being more steady more than anything.
Analysts say the recent tariff hikes, job losses, and many other economic factors in the US contribute to the weakening of the US dollar. Notando Mankutulela in Johannesburg.
From markets to innovation. From markets to innovation. Africa in Business with Thami Ngubeni covers it all. With Africa's future in focus. Channel Africa, the African perspective.
It is now 29 minutes after 4 p.m. Central African Time. Do continue to interact with us on all the various social media platforms On X, Instagram and YouTube, you'll find us at Channel Africa 1. On Facebook, we are at Channel Africa. Now, if you've got any stories that you'd like to share, stories that you believe would be of interest to our listeners, both on the African continent and in the diaspora, make sure you send us an email at newsroom@channelafrica.co.za. It's gone exactly 4:30 p.m. Let's head over now to the markets desk, where Buntle Headbush is standing by with your latest market indicators.
Business news on Channel Africa. The African perspective.
Thanks, Thami, and good afternoon. Time now for our final look at the indicators. And $1 is trading at 17 Rand 36 in South Africa this afternoon. In Botswana, it's trading at 13 Pula 19. In Namibia, at 17 Namibian dollars 36. The Zambian kwacha is trading at 23 kwacha 87. In Kenya, the dollar is trading at 128 shilling 32. In Ethiopia, at 143 birr 64. Uganda, 3,493 shilling. And in Tanzania, it's at 2,459 shilling. $1 in Nigeria is trading at 1,501 naira this afternoon. In Egypt, the dollar is trading at 48 Egyptian pound 12. In Tunisia, it's at 2 dinar 89. Algeria, 129 dinar 18. In Morocco, the dollar will cost you 9 dirham. In Angola, it's trading at 912 kwanza, while the Congolese franc is trading at 2,800 to the US dollar. And now looking at commodities this afternoon, gold is trading at $3,649 and platinum $1,396 per ounce, while Brent crude oil is at $67.20 a barrel this hour. And those are your indicators. For any business stories you'd like to share with us, please send an email to newsroom@channelafrica.co.za or call us on +2711 714 4459. For Channel Africa Business, I am Buntle Headbush.
Business news on Channel Africa. The African perspective.
And for the business of sport, a very good Monday afternoon to you, Musibudi Makura.
Sports on Channel Africa. The African perspective.
Thank you so much, Thami. We'll start here. So Tim Sugazi, the chairman of South African Football Society's Galaxy, says a large chunk of the money made from selling their best players will be used to acquire replacements. The club owner acknowledged that once again that their business model was indeed to find hidden gems and move them to well-off teams in the Betway Premiership. Now, Galaxy's most recent transfer was a record for the club, with defender Samukele Kabini joining Norwegian outfit Molde FK for a reported fee of around $865,000. This was during the January transfer window. Sugazi believes the only way to survive is to use the funds wisely.
Our model requires us to dispose of our best assets in order to reinforce. So people only listen to one part that we sell. They ignore or neglect to listen to the other part that we, at the same time, we are reinforcing. So what bears testimony to that is that despite all the sales, the 3 seasons ago probably we sold about 7 players, starting 11. Coming out from position 5, we ended up in 6th position. So this season again, I think we've sold about 5 top players.
Well, South African marathon record holder Elroy Gelant has voiced his concerns about the importance of financial literacy to help athletes manage their earnings wisely, given the short-term nature of the sporting career. He says he plans to bring in financial experts to offer guidance while also highlighting the value of education, a message he strongly advocates for as a lecturer at the University of the Western Cape.
Financial management, well, alcohol type of things, a guy that's on the top, how do I manage if I'm there on the top? What do I do when I get a lot of money, So I think that's where we're going to start, and that was the discussions last week in terms of our role that we think we need to play in South Africa, and then obviously we're going to tap into the administrative side of things also, because obviously there's also a little bit of assistance and need that we need to provide to our administration at ASA.
On to golf news now. Scotty Scheffler picked up his 6th win of another outstanding year at the Pro-Code Championship, firing a final round of 67 to pip Ryder Cup teammate and rookie Ben Griffin by one shot at the Salvador Resort in California in the USA. So Scheffler in the process pocketed several big payouts this year, and although this is one of the smaller prize funds, he still collected over $1 million. Meanwhile, Griffin's consolation was worth $654,000 out of a total prize fund of $6 million. Meanwhile, staying with golf for a second year running, the outcome of the BMW PGA Championship rested on a playoff. Alex Noren reached it in pursuit of his second DP World Tour win in less than a month, with Adrian Sadler, his opponent, hoping to follow up his win at June's Italian Open with another career highlight. So in the end, it was Noren who claimed the title at the Wentworth Golf Course for a second time, also the first, having won the first of 2 DP Tour flagships event back in 2017. So as one of the circuit's prestigious Rolex Series events, the BMW PGA Championship had a big prize purse with $9 million on offer, and the Swede claimed the prize of $1.53 million for his win, the same figure Billy Horschel banked a year ago when he edged out Rory McIlroy last year. And finally, back home, South Africa's most social 5-kilometre run is set to once again combine electrifying racing with unforgettable fun when the Boxer Super Run returns to Durban in South Africa's KwaZulu-Natal province on the 12th of October. The run boasts an impressive $8.4 thousand in prize money for 2025. The prize purse will be shared across both the elite race as well as the open wave. In the elite race, the top 8 men as well as women will earn the prize money, with the winners also each claiming a well-deserved $1.1 thousand. Now, in the open wave, the top 3 men as well as the women in the junior, the open, which is between 40 and 49 years old, 50 and 59, 60 and 69, and 70 plus categories will also be recognized and rewarded for their performances. Well, that concludes your sports news this hour. For any sports stories you'd like to share with us, our email address is newsroom@channelafrica.co.za, or call us on +27 11714 4459. There'll be more sporting updates tomorrow morning on Africa Rise and Shine with Channel Africa Sport. I am Musibudi Makura.
Sports on Channel Africa. The African perspective. From markets to innovation. Africa in Business with Thami Ngubeni covers it all. With Africa's future in focus, Channel Africa, the African perspective.
It is exactly 4:38 Central African time. Still coming up for you on Africa in Business, a conversation with FNB senior economist Koketso Mano. We'll be looking at the latest market developments, including a reflection of the week that was. We'll also be unpacking the GDP that came out for the second quarter. That's quarter 3. Also looking at inflation in the United States and what in South Africa we can expect from our own print. It is exactly 38 minutes after 4 p.m. Central African time. And just a reminder to continue interacting with us. You'll find us on email at newsroom@channelafrica.co.za, at Channel Africa 1 on X, Instagram and YouTube, and on Facebook. We are at Channel Africa.
Africa in Business on Channel Africa.
Now, On Afrique, Africa's largest digital payments network, has partnered with Visa to launch Visa Pay. This is a cloud-native payments as a service platform that's designed to expand the digital financial access across the Democratic Republic of Congo. The collaboration between the two payment platforms will enable mobile money collections as well as disbursements from M-Pesa, Airtel Money and Orange Money wallets, effectively bridging Visa's card network with millions of mobile money wallets across the DRC. To break this down further for us, we joined on the line by Christian Bwakira, Chief Commercial Officer at On Africa. Very good afternoon to you. Good to have you with us. Welcome.
Good afternoon to you as well. Thank you very much.
Perhaps let's start off with this collaboration and really what is a strategic partnership between yourselves and Visa. Why did this come about and how?
First and foremost, again, thank you so much for welcoming us. So maybe just to set the scene a little bit and to put a little bit of context, so talking a little bit about On Afrique for your viewers and for your listeners as well. So today we interconnect 1 billion mobile wallets across 43 African countries and also interconnecting 500 million bank accounts. And it's important perhaps maybe to reiterate our mission, which is one. It is simply connecting the African continent by making borders matter less. And we believe that as fragmented as a region in which we operate, the only currency that matters is access, right? And that should be the case across the African continent. Now, going to your question specifically, the value of this partnership comes in a couple of formats. One, it builds on our history of and connecting mobile network operators, financial institutions, and global networks across the African continent. And importantly, we've had tremendous penetration of mobile banking solutions across the African continent, particularly at domestic level. Our aim in this is to connect domestic payment rails, in this case, mobile payment wallet holders, to global payments ecosystem, in this case, Visa. And that is enabled through a Visa Pay mobile wallet, accessible to all DRC Congolese customers.
And how do you expect Visa Pay to impact informal traders? I'm talking about small businesses, the kind of small businesses that are cash heavy and currently transact using physical money.
Well, it will enable a number of use cases. First and foremost, it will enable through, naturally, Visa Pay to channel those funds into a digital payments ecosystem. That's one. Second, it will allow for small merchants and traders as well to have access to a global network via Visa Pay. A global network in the sense that it will allow them to generate cross-border transaction. In simple terms, being able to generate e-commerce transaction or to facilitate e-commerce transaction simply through the use of their mobile phone.
And what about the unbanked populations on the continent? They've been a major concern for a number of financial institutions. Talk to us about how this collaboration is going to give access to those.
You're spot on. One of the major challenges of African governments, and DRC being one of them as well, is that of financial inclusion. So if we look at the bank population today across the continent, we're still hovering a little bit north of 50% or so. And so it remains a significant challenge. With Visa Pay, consumers will be able to easily download the Visa Pay mobile application. They will be able to select a bank of their choosing that they will be connected to, naturally ensuring that they follow regulatory and compliance procedures. And then finally, they will be able to top up their Visa Pay wallet through any of the MNOs that are operating in the DRC to which On Afrique is connected. And you've cited it originally, so that would be the likes of M-Pesa, Orange Money, and Airtel Money. So again, it's really interconnecting local payment rails to global payment rails, facilitating financial inclusion through the Visa Pay, which becomes a single point of entry and a single ecosystem for consumers in the DRC.
One would assume that those who are unbanked are unbanked because there are certain obstacles that perhaps prevent them from being compliant or being able to access the technology and the banking system. How simple is this process? I mean, you mentioned there that they have to select a bank of their choosing. Is that not a possible hurdle?
We've gone through the consumer's journey, and I stand grounded here, and actually by our partners at Visa. But having walked the journey, I was actually in the DRC last week for the launch event of Visa Pay. And there were actually trials that were conducted in market to see how rapidly and how fast and easily consumers would be able to onboard the application. It was surprising. Actually, it was completed in minutes. A simple download of the application, KYC simply by scanning one's ID, and anti-money laundering and KYC processes are completed, and simply a selection of a financial institution of their choosing, and off they go, and they can connect to the Visa's network, but also to local, again, payment rails, but also use cases. So whether they want to facilitate domestic transactions, P2P transaction, payment to merchant transaction, or simply be able to move funds from their wallet to a mobile money ecosystem, they are enabled to do that.
And are there any plans to perhaps expand Visa Pay beyond the borders of the DRC, perhaps into other African markets?
Absolutely. I think that where there would be appetite is naturally for markets where there is a predominantly high mobile money penetration, and where there is stronger appetite for interoperable solution. Such is the case naturally in the DRC. When we look at the numbers and the figures, whether it's from a remittance standpoint, cross-border payment flows, or simply domestic payment rails, the volumes are significant. And so when we look at that category of simply that pool, there are dozens of markets that would be eligible for similar solutions in the African continent and beyond.
All right, we'll leave it at that. Chief Commercial Officer at ONAfrique, Christian Boakira, wishing you all the best with this latest collaboration. Thank you for your time.
Thank you.
Thank you. He is Christian Boakira, the Chief Commercial Officer at ONAfrique, on the latest between their company and Visa, bringing up Visa Pay. Yes, it's starting in the DRC, but as you can hear, all intents and purposes to expand to other African markets on the African continent that already have a good, solid mobile money penetration. It takes us to exactly 4:47 Central African time when we return in just a moment to look at the latest market movements with FNB.
Got something to say? Are you passionate about issues that matter?
Do you have a voice that deserves to be heard?
Well, we've got the perfect platform for you. Call in or drop us a WhatsApp on +27 63 406 9126.
And we will call you back.
So you could have your say and be part of the conversation.
30 years of age. I just turned 30 on the 15th of November. So that's who I am, you know.
It's not just talk. It's your chance to air your views.
Share your opinion.
Engage with a community that values your perspective.
Follow us on our social media.
Visit our website at www.channelafrica.co.za and get ready
to share your views
on Channel Africa,
the African perspective.
Africa in Business
on Channel Africa.
Before we take a look at the latest market movements with FNB, let's focus on the G20. The G20 Tourism Ministers meeting took place in Mpumalanga, South Africa. The gathering brought together tourism leaders as well as diplomats from around the world to discuss strategies for boosting the industry, with a strong focus on sustainability, marketing, as well as collaboration between the nations. Channel Africa's Lebohang Mabange attended the event and filed this report.
The G20 Tourism Ministers meeting in Mpumalanga placed the spotlight on South Africa's efforts to attract more visitors and make travel easier. South Africa's Minister of Tourism, Patricia de Lille, says government has taken steps to remove barriers such as visa challenges.
In terms of taking South Africa globally, government's role is to create the conditions conducive that tourists can come here. And the one issue that we have dealt with now successfully is the visa issue. By the end of September, a new visa system is coming on board, digital. It's called the Electronic Travel Authorization. And the whole world then can use that one system.
Dilo added that South Africa must be more competitive on the global stage by marketing itself more aggressively.
The target in the National Development Plan is that by 2030, we must have grown tourism to 15 million arrivals. Linked to that is the marketing. We really have to be a bit more aggressive in our marketing because of the competition. We've got Thailand, New Zealand, and all of those countries. And so we have now shifted our budget to put 80% into digital marketing, where you can really market South Africa from anywhere in the world. You don't need to go to a SA Tourism office in Europe or in New York.
Nigeria's acting High Commissioner to South Africa, Ambassador Temitope Alexander Ajayi, welcomed South Africa's efforts, saying Nigeria has also made changes to attract more visitors.
Right now, the government has made it important that even in terms of visas, it's being processed within 48 hours. Once you show interest, because we want a lot of people to come to our continent. We want South Africans to come to Nigeria. Particularly, we need it, and we need it because, and we want more South Africans to come and see and interact, build friendships with their colleagues in Nigeria. These are the area of promoting tourism, you understand, and that is why we are happy to be here.
Ajayi also emphasized ongoing collaboration with South Africa and announced that Nigeria will host another high-level G20 meeting next month.
We are collaborating with South Africa right now, and we are also going to host one of the big-time G20's high-level meeting next month in Abuja, which is going to be on industrialization and agriculture. So we are working closely with South Africa on that. The time has been fixed. It's going to come up on the 22nd to 23rd in Abuja, which all the ministers, all the trade ministers in Africa, all the trade ministers, all the agricultural ministers in Africa will converge in Abuja with other G20 partners to discuss how to promote industrialization and agriculture on the continent. These are areas that are working together with the South African presidency.
French ambassador to South Africa, David Martinen, stressed the importance of sustainability while also pointing to the need for improved connectivity across Africa.
We believe that tourism can be at the core of development of many economies, and especially in Africa. Africa has so much to show to the world in terms of destinations and places. But for that, we need at the same time, and it may appear contradictory, but it's not, we do need more air connectivity in terms of transportation of passengers. But at the same time, we need to make sure that air transportation becomes more sustainable.
The meeting in Mpumalanga sets the stage for further G20 engagements later this year, with sustainability, investment and collaboration remaining central themes for the global tourism industry. Reporting for Channel Africa, I am Lebogang Mabange in the Mpumalanga province of South Africa.
Africa in Business on Channel Africa.
It has gone exactly 4:52 Central African time. Joining us this hour to look at the latest market movements from FNB, senior economist Koketso Mano. A very good afternoon to you, Koketso. Good to have you with us.
Thank you for having me, Thami.
Perhaps let's start with a reflection of the week that was. Some rather big data that came out was the GDP, which was at 0.8% for the second quarter. That's a good sign that Q3 might be even better, you think?
Hopefully, we think that the momentum is there. So with the second quarter data, we've just seen the buildup of momentum that we've been hoping for since the year started. And what was interesting for us is how mining, manufacturing also came on board and contributed positively to GDP, because for the longest time, the story around 2025 activity has been the consumer and household spending. So it's very important that we also see these productive sectors also contributing to GDP growth. And I guess for the third quarter, the story is mainly going to be around how does manufacturing improve, because already at the start of the quarter, we did see a slowdown in that area. Mining is likely going to be supported by, commodity prices that have been improving, especially in the precious metal space. And then what we hope to see is that the consumer will start to benefit from lower inflation, lower interest rates. But obviously, we are worried that, the spending impetus or, the boost that was received from the retirement withdrawals will probably start to fade. So the third quarter is going to be a very interesting number, but we hope to see more momentum building up. And unfortunately, though, when you look at the growth number in itself, it's probably going to still be relatively low because for the year we only see 1% growth.
Certainly way below what the country would like to be seeing. Focusing on the United States for a moment, we saw inflation rising there in the month of August. What are we expecting from our own print come Wednesday?
Yeah, so we already started to see our increase come through. With inflation having remained, benign around that 3% mark or even below for the first half of this year, we did see those numbers. But going into July, those utility increases came through quite strongly. Electricity in double digits, water and other services also increased. So we saw inflation rising from 3% to 3.5%. But in August, we won't have very meaningful or considerable infrequent surveys coming through. So you're probably going to pay attention to the food inflation number because that has been a bit of a concern in the past few prints. What you will see also is that fuel deflation will continue to narrow, but in general, you should still see oil prices remaining contained. The rand is resilient, so we don't think fuel is going to be a problem. Similarly, we don't think demand-driven inflation will be a problem as well going forward.
On Wednesday as well, Koketso, we are expecting the retail sales to be released. We saw the sales losing momentum year on year with the growth slowing to 1.6% in June, and it's been flat as far as volumes are concerned. Expectations there for July?
Yeah, so it goes back to what I mentioned earlier around, the fading impact of the two-part retirement withdrawals. So unfortunately, that is coming through in the numbers when you look at the retail sales data. But as I said earlier, I think what will really support the consumer is low inflation. We've also been hearing about inflation beating wage increases. So hopefully that is something that also continues to support the consumer. But the momentum that we saw at the end of last year coming into 2025 has definitely faded. And I think that speaks more to the liquidity injection that households received from the retirement withdrawals rather than any structural, changes in consumer spending.
And on Thursday, we are seeing the Reserve Bank. They expected to announce the decision on the interest rate. And the question is to cut or not. Where do you bet?
We would bet for a cut, but it doesn't seem probable. Simply because the MPC has indicated that they would like to target lower inflation, right? And so they effectively moved towards that more officially in July. If you remember that they changed their baseline forecast to reflect that target of 3%. So we think that this will have implications for how monetary policy moves going forward. They are traditionally very conservative, but we think that trying to lower inflation expectations and achieve the 3% target within the next 2 or 3 years will require policy to remain relatively restrictive. So unfortunately, we may see the MPC remaining on hold, but a cut may be probable within the next year. We just don't think it'll happen in 2025. So the next cut may be only in 2026, unfortunately.
Oh, well, thank you so much. Okay, so a lot to look forward to this week as far as announcements are concerned. You have yourself a splendid one.
Same to you.
Thank you. That's Koketso Mano, FNB senior economist. A lot happening this week, Wednesday and Thursday, specifically with a number of releases being expected from inflation to retail sales and interest rates. It's gone exactly 4:58 Central African time as we make way for Vue d'Afrique. Bonjour, Joël.
Bonjour, Thami. Bonjour à tous les auditeurs de Channel Africa. Alors, tout à l'heure sur Vue d'Afrique, il sera question de l'opposition camerounaise divisé sur la désignation de Issa Chiroma Bakari comme candidat consensuel. Nous parlerons également du Burkina Faso avec Human Rights Watch, mais également du Malawi qui se prépare à voter pour les élections présidentielles. Merci, Thami.
Merci beaucoup. Well, that's how we as African Business come to the end of this Monday edition. Thank you to our fabulous team, our producer, Mabu Buloka, technical producer, Dando Lutuli, social media talent, Butelezi. On the news desk, Onele Nzinzi, economics desk, Buntle Headbush, and sport, Musibudi Makura. I'm Thami Ngubeni. This has been Africa in Business on Channel Africa.